All right. Welcome back to another episode of the Life and Leverage podcast. We got Michael Zanetti back with us today. Thanks for coming in, buddy.
What's going on, bud? How's everything going?
Oh, just living. Got a baby girl on the way now,
That's what I hear, man. That's what I hear. That's that's definitely going to change things for you, huh?
It's a big change for sure, man. For sure. It's getting exciting though, Watching the wifey get bigger and
I'm sure she appreciates you saying that too.
Oh yeah, it's fine. She knows she it makes her feel good. It doesn't matter that she's getting bigger just because my child's in there. So that's a good thing.
It's the purpose, man. It's a sense of purpose, and that gives her a drive. And it's funny. I'm sure you felt this too. I remember when my boys were coming, and it was like I had this renewed sense of like, get at it. Like I gotta make more money. I gotta do better right now because I gotta be able to perform for them. You know what I mean? Deliver for them. So yeah, it was a big transition. Big transition.
I'll tell you, you gave me some really good advice though when we first started talking about it. Like, look, man, you make good enough money. You really don't have to worry too much about that part. What you need to focus on now is just being in the best shape and healthy so that you can always be there.
Yep.
Your health is now the number one thing.
Just this past weekend, I played beach volleyball with my kids, which was, by the way, it's just an awesome experience when you're on the same team as them and you're able to play with them and stuff. It's so much fun. And then we went surfing, we went skimboarding, we did all this stuff. And I will tell you, all the things in your life that you do, you can go out, you can party, you can do all that stuff, but there is no feeling like being out there with your kids and being able to share those experiences. And
I bet, man.
You gotta be in shape enough and fit enough. You don't have to be the best, but you have to be in shape enough and fit enough and healthy enough to be able to do those things to really get the most out of the experience. It's one thing to sit on the sidelines and watch, but it's a whole nother thing when you paddle out with the kids and you get to, you know what I mean, be out there with them and stuff. It's cool. So I stand by that firsthand. I stand by that advice. Whoever gave you that advice knew what he was talking about. So
yeah, just make sure you're there.
That's it. Make sure you're there. It's hard to explain other than that, man. And you talk to a lot of parents and you'll hear different points of view on that, but that's something I absolutely live by. I absolutely live by that. So
heck yeah. It's good advice, buddy. Good advice. Well, the reason that we're having you on here is for the other side of that stuff, the money stuff, right?
Yes, sir. Yes, sir.
Another way to make sure that the new addition to the family has another source of income, right?
Absolutely. Always.
So what do you got up your sleeve, man? Tell the world.
So you've been working with me in various capacities over the years, and as you well know, we don't get real complacent around here. We don't sit back and just ride whatever wave we're on. We're always looking for the next wave. So about a year ago, I realized that we had a really cool group of talent, and it's rare to get super talented people in one place together. And we were able to do it in a way that I don't want to say it was accidental, but it was kind of interesting how it was almost like this magnetic pull. And we've gotten some really, really, really high class traders, guys that were floor traders, guys that were right on the edge of the algorithmic trading revolution, the digital trading revolution. And we've somehow managed to get them all together. And they have some great conversations. You've been around for some of these. I mean, the barroom conversations of guys that like started algorithmic trading are pretty damn interesting. You know what I mean?
When the switch from the floor to trading on computers and stuff, when all of that stuff came in to play, and then from even when the point of when the CBOT closed its doors to the trading floor and people had to completely learn how to trade again. It's a completely different game. Yeah,
right.
It's not even close to the same thing.
And it's interesting because you see different people did it in different ways. You speak to the Pat Asalones of the world, or you speak to guys that were, more traditional style. They really haven't changed that much of what they do. Their model
Right.
is, very, very distinct. And then you talk to guys like Bubba, Todd Harwitz, and he was able to take what he did almost instinctually and turn it into a system, right? He was able to
Yeah.
build a digital system out of it, that echoed what he did. And then you meet guys like Dan O'Brien, and Dan was able to not just take it and echo it, but enhance it. He said, wait a second, I've got a computer now that I can work with that
Yeah.
can do things that much faster and that much more efficiently. I can now process data. And he built these massive algorithmic, systems behind
Yeah.
it. But what's, I think, the crazy part, and I think we'll look back on this and remember this, is that's the first gen of the electronic traders, right?
Yeah.
That's the first gen. But now the second gen is coming around.
Hmm.
And these are guys that grew up in the digital trading era.
Yeah.
And, their backgrounds are in mathematics, um,
Quants.
quants, right?
Yeah.
And their backgrounds are in computer software and development, right? A lot of
Yep.
these guys are developers first, traders second. And every once in
And
a
AI.
while, and one, let's not even get to AI yet. Let's just let's just talk about this second gen of guys, right? Because
Yeah.
these guys, they don't know any different. They don't know the floor. They don't understand how things work. They don't understand the poker game, right? That was floor trading. Now
Yeah.
you have this next gen of guys that have never sat face to face with someone and traded. They've only ever done it on a computer, right? So they've
Right.
been constantly building these efficient models and constantly building these efficient models. I met through a series of circumstances. I met a very, very, very intelligent developer in his early 40s who's a trader out of Brazil. And, you know, in a 2-second conversation with this guy, I realized, first of all, he's way smarter than I am. Okay. That was the first thing I realized. And I said, what? Okay. Yes. But the second thing I realized is that their perception of trading is almost like a game. They don't perceive it like we do, where we perceive it like as a financial thing. It's actually trading, right? It's giving
Yeah.
this for that. They perceive it as like a video game, and they're trying to achieve this next level in the video game. And you know, they look at things as tools, and how many
Yeah.
tools can they bring into play as quickly as possible. And you know, even listening to the way they speak, it's a totally different mindset. So then you have this second gen of guys, right, who grew up with this model, right, who look at it as numbers and figures. That it doesn't matter what market they look at. Bubba said that the
Yeah.
other day, and I love that. I can put up on the screen any market without a label, and I can tell you where the next trade is, right? Because it doesn't matter what the numbers are in his mind, right? He's just
Yeah.
seeing the pattern. These guys are the opposite. They're saying, no, the numbers are super important. They're the only thing that matters, right?
Yeah.
And their version of the technical analysis is it's literally patterned numbers,
Yeah.
right?
They're looking at the
So
matrix.
they're literally like, you see, that's what I see. I see those green numbers falling down the
Yeah.
screen. That's what I imagine. That's what I
Yeah.
imagine that they see the world as.
Yeah.
And when you talk to them, they're funny because they talk about things that we look at as, wow, these were like really cool, like the moving average, or you take like the MACD, for example, right? We
Mhm.
look at that as, oh well, that was kind of a unique thing. It's not old now. It's just not young anymore, right?
Yeah.
These
Right.
guys look at it like that's like Stone Age stuff, right?
Mhm.
Like, I understand it
Mhm.
has some bearing and stuff but that's what they used back in the Stone Age.
Right.
Man, that mindset is untapped now. That's so different than what we have, right? At least
Yeah,
what I
for
have.
sure.
I can speak for myself. So you take that mindset and you give these guys these tools, right? So you start going to where high-speed internet is the norm, right? Flash boys, they don't need to worry about speed anymore, right?
Yeah.
You take away the HFT models, so they're not trading in microseconds, they're trading in larger scales, right? Then you start adding in things like, hey, there's this thing called AI now,
Right.
right? where it can actually, the machine can teach itself and it can
Yeah.
constantly learn and it can constantly be doing things that you would normally have to be doing. And you kind
And
of
let
start,
me add on to that now, which I thought was the craziest thing when I started using it and I saw it. I knew it was out there, but I never did it. Is the use of a virtual machine. Now
yes, sir.
now you never have to turn, like, you have to turn off your computer. It's going to turn off on its own and go to sleep and stuff like that. Now it's all done in trading on the bots, up in these virtual machines in the cloud, and so it's constantly running in all
Yeah,
different areas. Never
yeah,
stops.
yeah. It never stops. It never shuts off, and you don't have to worry about it. Any upgrades can be done remotely. Like, think about that for a second. So you've got virtual
Nuts.
machines, you've got AI, you've got this, and the truth is, a lot of these guys, I loved one of the developer statements to me, and he said it in a way that it was so genuine. It was so genuine. But when I thought about it later, I was like, wow, my generation would never say that. His generation, this is the way they think. He said, number one, he said, I'm a terrible trader. He said, I'm too emotional. And he said that I have to sleep. And I said, what are you talking about? We all have to sleep. And he goes, no, he goes, the computers don't sleep and they're completely unemotional.
Yeah.
And he says,
Yeah.
if I train that computer right to do the things that I want it to do, right, that virtual machine right, I can train it in a way to do things that it'll take care of itself while I'm sleeping, while I'm resting. And by the way, it has no emotion. It doesn't care if it had a bad day or if it had to get up early because its kid got up early, or it doesn't have those effects. It
Right.
just does exactly what it's told to do.
But it can
You know?
also learn now how to get better.
Yes.
So
Yes.
like you,
Yes.
you learn over time and you get better. Now the machines can actually do that also.
Well, and then so the question then becomes, and this is where this most recent project got super interesting to me. So, I was on that early chat GPT days. I was playing around, having it write like marketing emails for me and stuff. And I thought it was really cool. Like, I was like, wow, like number one, it's a huge time saver, right? I thought this was a
Yeah.
super powerful tool. I had no idea that like I was scratching the surface with it, right? I thought I was like the man using it that way.
Right?
And then I started seeing what like these really smart people were doing with it. And I was blown away, right? So so this team down in Brazil, they're called Aurum. They developed this really cool technology, and they've been working on it for a few years now. It really just came to a functional use level late in 2023,
Okay.
and basically the model is it's really simple, but when you hear it, it's simple, but obviously the background to it makes it super complex. So a lot of these people that are using the AI, they're just plugging it in, right? And they're saying, okay, you're going to trade at this time and you're going to do this, but they're not really using it for the learning and the relearning capacity, right?
Right.
They're using it more. I use the term execution stage. They're using it more at like an execution level, not necessarily to learn and relearn. So what these guys had figured out, and this was the really cool part. So they had taken those sort of like old school 9 indicators, and they said, okay, there's these core 9 indicators that I don't want to say they're widely accepted, but they're kind of the ones that everybody uses some version of, right? So you have like your MACD, you've got your high volume areas, you have these different indicators, right? And you talk to most traders, and they know some version or some configuration of those indicators. And they said, okay, here's the interesting thing when you go back and do research on them. Those indicators have certain optimum conditions that they operate under. Okay, so there has to be a certain amount of volume, certain time of day, certain days of the week, certain times of the year, certain price points, certain, you name it, right? Pre-news, post-news, whatever it is, they work at very specific conditions at their best capacity. And hey, by the way, it's really cool that they do that, except those conditions constantly change, right? So today's market on open is not the same market that was a year ago or a year before that or a year before that. The volume's different. The size of the constituents in the market is different. The price points are different. So it's
even
a
just
constant
towards like around the holidays, you know, I mean, think about how the market's moving around the holidays and stuff like that versus now. It's completely different.
Or June. Right. Or June, when all the traders decide that they want to go on vacation, so their volumes shift down. Right. And it's massive changes. These aren't small changes. These are massive changes in the marketplace. So the problem with using any of those indicators is individually is that they have optimum times and they have suboptimum times, right? They have times where they're really performing the way they're supposed to, and then they have times where the conditions aren't right to get that level of performance out of them. And the thing is that those optimum conditions keep changing.
Right.
So what these guys did, which I thought was a really cool use of AI, is they said, rather than using the AI to tell the software to trade during those optimum conditions, let's use the AI to constantly relearn the optimum conditions. So it's constantly teaching itself that, hey, listen, during this low volume time period, pre-President's Day weekend, okay, the markets don't have enough volume to use a moving average. So we're going to discount the value of the moving average indicators because it doesn't work optimally during these conditions. Okay. And what the software is doing is it's constantly relearning, it's reviewing what the present state is and reviewing if this is an optimum time frame or a suboptimum time frame. So it's constantly reback testing itself and then forecasting based on these conditions if this is a time that will actually work based on the back testing. Does that make sense? And it's doing it on a constant basis, not for one indicator, for all 9 indicators.
I want to explain something to somebody on that. I want you to continue on it, but I don't think everybody knows exactly what back testing means. Why don't you explain that to them?
Sure. So one of the problems with forecasting, looking forward, is the idea that you can only base it on historical data, right? So you have these hypotheticals going forward, but the hypotheticals have to be based on the reaction of market conditions that happened before. All right. And if you go to anyone that's legitimate, any business that's legitimate, that's involved in the financial industry, okay, you're going to see right at the bottom, in the securities industry and any of the industries, you're going to see right at the bottom, it says some version of this phrase: historical results are not indicative of future results.
Yeah.
Okay. So basically what they're telling you is what happened in the past doesn't mean that's what's going to happen in the future. All right. And they're absolutely 100% right. All right. You don't know what the future is going to yield. And anyone who tells you differently, tells you they can predict the future, tells you they have that crystal ball, they're completely full of shit. Okay. But what we do have is we have that back data. So we can look at the patterns of what happened when there was this much volume in the market during this time frame, during this price period, during this, right? At this point in, say, a futures contract. And you can take all of those different data points and say, okay, how does that compare to what's happening right now? And what was the results then compared to what's happening right now. That's what backtesting is.
Like a flight simulator that you could go back in at certain times and say, what if the engine dropped out on what if the right
what if engine one falls out? What if engine one falls out, right? So if engine one falls out, how do you react, right? What is the effect on the plane? It's exactly the same concept with this, right? Now, I'm going to tell you exactly what the lawyers are going to tell you, what any advisor is going to tell you, what anyone in the financial services industry is going to tell you, okay? They're going to say, well, historical results are not indicative of future results, because that's what they have to tell you. And they're right. I just want to be clear. But it's the best data that we have to base our futures decisions off of, right? That's really what it comes down to. So does it mean it's going to react exactly the same way? Absolutely not. It's all a game of probabilities, right? It's all probabilities. There's a greater likelihood that in a similar period, at a similar point in time, with similar other market conditions, it reacted this way. The likelihood is it's going to react exactly the same way again. Okay.
Right.
But it doesn't have to. Right.
But
so
if you're a pilot, I mean, where are you going to train on first?
You want to take engine one out first and find out how it reacts after, or do you want to try it on a simulator, right, and see? So and that's really what backtesting is. So there's a lot of different versions of backtesting, right? So there's more traditional backtesting, which is, look, it's just reacting to the market. It's reacting to the market conditions. Okay, we predicted that it would move in this direction based on the historical backtesting, and yes, it moved in that direction. Okay, but there's a whole lot of other factors that when you do something, I use the term deep backtesting. Okay, that you have to take into consideration. So one is you've got to take into consideration commissions. You've got to take into consideration the volume of the movement. Right, that's number two. So okay, the market changed direction, but there wasn't enough volume to even get a trade in, right? So maybe it changed direction, but it was just kind of a light movement in that direction.
Yeah,
that doesn't do you any good with software. If there's a 30 contract move and you're trading 200 contracts, it doesn't really help you. Okay,
yeah, you're not going to get filled.
You're not going to get filled.
That makes sense.
So deep back testing is actually looking at what the predicted results would have been if you had the exact size of things that you're working with the commission structures you're working with, right? There's a lot of softwares out there that if you take commissions out, they look like winners all the time, but they're these tiny little wins, right? And then you add commissions in and you realize that 70% of the trades were break evens or losses because of the commissions.
I had a student tell me one time, "Hey man, I'm up. I did $3,802 on my simulated account today." I'm like, "How many trades did you take?" Like 382.
Exactly.
You know, if you take commissions into that, then
you have $9,000. You have $9,000 in commissions, but you made $3,000. Congratulations.
Yeah, exactly.
But you know, it's funny. So we own Nova Trading Lab, and Nova's exact purpose is to underwrite software from third parties. Okay. So what we do is we go out and we find software. Actually, I shouldn't even say we go out and find. People bring us software all the time. We don't really have to go out and look for it these days, but people bring us software and we underwrite it. And basically we decide, look, this software is a viable solution for the marketplace and we'll help you take it to market. We want you to make these corrections. Maybe your risk management is off, maybe, et cetera, right? So one of the most powerful things is when you get into a lot of these softwares, just like you just said, it looks amazing when you see the results. I mean, I saw a guy the other day, he had like an 87% win rate. I was like, that's phenomenal. It was a trend trader. It was absolutely phenomenal.
Yeah.
Except when you priced in commissions, his win rate dropped to like 23%, 24%. Because he was taking these tiny little scrapes, right? Little scrapes on the market. Now, is it possible if you could get a large enough account where the commissions were small enough and there was enough leverage, yes, there's a possibility here. But at the end of the day, it's such a fight to get to that level to be able to do that it wasn't worth it. So we see that a lot. That's probably the single most common thing that we see at Nova is we see software that on sim works great, but when you plug it into like real trading, it doesn't work. So, and that's these guys, when we rolled out this new software, Q8, this is one of the things I respect the most about the primary developer here is he said, look, nobody's going to touch this software until I do it myself. And the guy took his own money. He started with 300 grand. Then he had a few $1 million trading. And he said, I'm testing my own money because I don't feel right testing it on other people's money. And he said, sim is one thing, but when this thing goes live, it's got to go live the right way. It's got to go live with real efficacy in the marketplace. And the thing is I respect the hell out of that. And I believe in that because too many people bring this stuff to the market before it's ready. Yeah. And it's funny because he in Forex trading, they have these transparency third parties that basically link your account and they don't allow you. There's no like snapshots or cherry picking. They show every trade you take, win, lose, break even. They show your commissions. They show everything. And he put his program as he was testing it in my FX book, which is the one that we used. And I'm watching this thing trade and I'm like, it works. It obviously like clearly works. I mean, he was up double-digit % the first month. And he's doing it. And you know what I got out of it, in all truth and honesty, is I got FOMO. I'm like, bro, start trading my money because this is ridiculous.
For sure.
But I respected him because he said, listen, it's great that it trades on sim and it's great that we can backtest it, but is the reality going to trade the same way that it's going to trade on sim? And the fact that here's a guy who's steeped in AI, here's a guy that's steeped in this modeling, the computer modeling and everything else. And he said himself, he goes, the real world is different. The real world is different. It's got to work. And by the way, it does. It works really well.
Heck yeah. Ever since you gave me that link to check it out, I mean, it's fun to watch because I want to see if it's maintaining that same level day after day and week after week, and every time I check it, it's maintaining it. It's amazing.
So what's crazy is you and I, we get to see different traders and different trading styles and how they perform in different markets, and as we can both attest, I mean, January till now, as we step into April, the markets have not exactly been trader friendly other than like a week or two, right? It was a real choppy market early in the year. And finally, over the last few weeks, we saw some volume changes. And of course, everything slows down for Easter too. So it wasn't great market conditions. And it's kind of ironic because he got into this thing and with the MyFX book, and I said, and I'm like really analyzing this because I love the transparency. I love the fact that the analytics are all there for you. So when he deep back tested the software, he said to me, okay, so here's the thing. It's got this profit ratio and it's got this win rate. And he said, understand, the win rate is important, but the profit ratio is more important. If you're, and this is a hypothetical, this is not what the software is doing, but his point was, if you have a 1-to-1 reward risk ratio, you have a win rate that's over, say, 55%, you should be in the money theoretically with commissions and everything else. But he said, if you can get that reward to risk ratio higher, you don't even need to be a 50% break even to break even. You actually can be significantly even in the money, even with a losing win rate, if that makes sense.
Because it does, but why don't you break that down a little bit further though?
Okay, so if you're winning, let's just use real basic numbers so it makes sense. So if you're winning $2 on every trade, and every trade with the way whatever software works, whatever algorithm works, you're making $2, but you're losing $1. Okay. So every time you lose $1. Every time you win $2. if you're winning 50% of your trades, you're going to be up $1, right? You're going to be up $1 every 2 trades. Every 2 trades, you're up $1. So what do you want? You want to take as many trades as possible because you want to be up as many dollars as possible.
Yeah.
But the interesting thing with that math is you could actually trade at like a 40% win rate, right? You could lose 60% of your trades and still be in the money because you're still winning more than your cumulative losses.
Right.
Okay. So in the case of 10 trades at a 40% win rate, you would make $8 and you'd lose 6. You'd still be up $2.
Right.
Okay.
Gotcha.
So it takes a little bit to get your brain adjusted to the fact that you could lose a larger percentage of the trades, but win more money if you're winning more money per trade. Right.
Okay.
So, and I had mentioned to him, I said, hey man, this win rate looks kind of low, but it's still up. Like at that point, I think it was like up 11% or something. And he says, yeah, but we're up 11%. Like, what's wrong with you? Don't you understand that the profitability, the profit factor on it? And he says, and the best part is if we deep back tested it and we found out that it has a 55% win rate and we're at like a 47% win rate right now, all that's going to happen is we're going to win more trades as the system corrects itself and keep that profitability rate. He's like, this is actually a bad period of trading. And I'm like, double-digit yields is not bad. Like, let's just be really clear. Like your version of bad and my version of bad are different. But he was looking at it from a mathematical point of view. And he said, yeah, mathematically, if we're winning sub 54%, we're actually losing. We're not doing well for the software, even though it's still making money, right? Even though it's still a positive yield, it's not a high. The software isn't performing the way it will over a longer period of time. So they use a system, and I'd never heard of it before. He taught it to me. It's called the Monte Carlo method, and basically it says that you can't look at things in these small pockets of 3 or 4 trades. You have to look at it over a grand scheme of 1,000 trades or more, because mathematically that 1,000 trades will get you to the 0.1% model. So you can actually implement your trading model, right? So if your trading model back tested has a 55% win rate, at least theoretically, as you get to 1,000 trades or more, it should equalize itself closer to those numbers. Does that make sense?
Yeah.
So the mindset is that you get to those 1,000 trades as quickly as possible, because if you are having a bad stretch of trades, right, the faster you push yourself out of that stretch of bad trades, the more likely it is to equalize at that 55% number. I'm not sure if that makes sense, but so
I think I get
yes. So mathematically, if you're going through a period where you're winning, and let's just use a low example, you're winning 40% of your trades mathematically. Their model, because it's pure math and not emotion, like you and me, right? It's no motion at all. Their model is, if we're trading 40% next week, tomorrow, coming up, this thing's going to invert and it's going to start winning 60% of its trades, because back tested historically, it's at 54, 55. So they know that it'll push its win rate back up to balance out to that 54, 55 as it takes more trades.
Because it's
that makes sense.
It consistently.
It's so consistent. Yes.
Right.
It's so consistent. So what's really cool about this model, and this part of the risk management blew my mind, because I've never seen the model do this before. But now that I've watched this thing perform over time, it makes total sense. And here's the thing, it makes logical sense, but when you say it out loud, it sounds a little crazy. Okay.
Yeah.
You and I were trained on models where we would take 2 losses and we'd step out of the market. We'd say, it's 2 losses It's just not a good trading day. I'm going to pull the plug and I'm stepping away from the market. Okay. This model does the opposite. It says, I took 2 losses. The likelihood of my next trade being a winner is actually very high.
Because there's no emotions.
Because there's no emotions. Hold on 1 second. I'm going to close this shade real quick. It's super bright in here.
Yeah,
hold on.
No problem. No problem.
There's a limit to natural lighting, my brother.
That Florida sun's coming through.
Wow, right? So the mindset here is completely different than the way you and I were trained. Okay. So this software says if I've lost 2 trades in a row, the likelihood of the next trade coming in as a positive trade is higher. If I've lost 3 trades in a row, the likelihood of the next trade coming in positive is even higher. If I've lost 5 trades in a row, oh my goodness, then the likelihood of the next trade coming through is even higher. Does that make sense?
Yeah. So crazy. It does sound crazy, like you said.
It sounds crazy when you say it out loud, but if you have confidence in the belief that you will, that statistically, long term, this will trade at 55%, and you've had 3, 4, 5 losses in a row, the mindset is, well, it'll have to average out towards that mean at some point, right?
Yeah.
So what this software does is it says, okay, take the highest probability trades that we take only. Okay, so not the riskier trades, only the highest probability trades. All right, I think we had mentioned there were 9 indicators and you needed 5 in order to enter a trade. Now it says, okay, only enter it if 7 indicators are telling you to enter right now. Okay, highest probability trade, but it doubles down. It says the likelihood of the next trade being a winner is even higher. Does that make sense?
Wow. So then it'll actually trade at a higher.
It trades yourself back out of it, right? Yeah. So then you end up with these higher win rates or higher profit rates, even though your win rate may have not been where it was up to that point, because your profitability skyrockets on that next trade, even though you may have lost 2 or 3 in a row. It's all math. And this is what I was saying earlier about different mindsets of these young men and women that are trading now versus people that grew up on the floor or grew up. This is a totally different perspective that takes I got to be honest, it takes a little getting used to, because when I first heard it, I was like, you're crazy. How I just lost 3 trades in a row. I don't want to lose a 4th. You know what I mean?
Right. Yeah.
But he showed me something that was pretty amazing. First of all, he showed me, he back tested it, right? And he back tested it over a year, and he back tested over 2 years, and he back tested over 5 years, 7 years, 10 years of data. And he said, look what happens. It keeps moving back towards this mean number, which was like a 55% win rate, but above a 1-to-1 profitability ratio. So it was way more profitable on the trades that it was profitable on than it was for the trades that it lost on, right? Way more, like significantly more, right? Depending on the time frame, there was some variability in it, but it wasn't even close to 1-to-1. Okay. Bear in mind, again, this is back tested. Okay. We are talking back tested here, but holy cow, this caught my attention because when you see it trade over in your live account, which you're seeing now, you have this in your personal account. What you see is a level of consistency on a daily and weekly basis that you don't normally see when you step away if you take 2 losses, right? You see this weird level of consistency where the account just seems to, like, it's more of a steady growth. And it's like, where did the where did the transition in those two mindsets happen that made it this functionally useful? Right? Because it is, man. Because it really does take a minute to get used to it. Thank goodness that you don't have to do anything. Thank goodness that once you turn the trader on, it does it. Because I gotta tell you, it's like there's like a holy crap moment there. You know what I mean? Like,
for sure.
But when you watch it do it, it's super powerful. The other thing he showed me, which I'll be honest, I'd never thought about this from a mathematical standpoint, was he showed me that how many consecutive losses it would have to take before the account lost a considerable amount of principal. So the drawdown effect, right?
Okay.
You and I get into some of these softwares, and you've seen them too, where, this month they're up 39, 40, 70%, and the next month they're down 80%, right? And this is a regular thing. And we see these massive swings up and these massive swings down, but there's no consistency to it.
Yeah.
What my fear is always is these big drawdowns. I don't like drawdowns.
Those period of time while it is taking all those L's.
Yeah, like maybe when I was in my 20s and I was playing with money that I thought I had. Okay, I've got this many years in the future that I can keep earning for, and I can play the game. But like you get to a certain point in your life, the drawdowns kind of like they make your heart. They make your heart a little scared. And I start thinking about all the things that I did to that heart in my youth, and I think, man, this thing might not make it through, right? So the drawdown effect, and there's a mathematics side to the drawdown effect too. I use there's a classic math problem that I was taught that always stuck with me, right? Which is if you have $100 to start and you lose $25, right? That's a 25% loss. But if I need to make back that $25 to break even, I have to win 33%, because $25 of $75 is a 33+% win rate, right? So you have to win a larger profit factor than what you lost,
right?
Just to get back to even. So from a trading perspective, minimizing those losses gives you a much smaller ditch to crawl out of. Right. So even if you can limit the profits, if you have to limit the profits on those days, but in order to minimize the profits to minimize the losses, you end up with a larger, faster growing account over time because you're not crawling out of those big ditches. Right.
Yeah.
So when I'll be blunt, we've all gotten involved with those softwares. Yeah. Then we've gotten involved with those softwares that have those big swings, right? And you see that big swing up, that double digit, and you go, wow, that thing is riding. It's gonna ride forever, right?
Yeah.
And then it plummets, and we get into the what's the crypto term, hodl? We're just gonna hold on for dear life here. I love that term, by the way. I love that term. But like those swings get a little scary with some of the softwares, and if your timing is wrong in the market, you're screwed, right? If you got to take out during a massive drawdown period, if you got to cash in during that period, or you can't wait through it, or you used money that for whatever reason you need for your kids' braces, or you haven't experienced that yet, but you will. Your kids' braces, or the sports programs you want them to do, or whatever, and you need that cash right now, and you're in a 30-40% drawdown. You just shot yourself in the foot. You know what I mean?
I mean, we can be honest. We can be honest. That's basically what happened with the LOD, right? I mean, that is what happened. It was solid 39.23% the first month. Then after that, it just really started going through the downtime, and that downtime after that
scares a lot.
It's too hard to hold. Yeah, it's hard to hold.
It scares a lot of people, and it's funny because if you look at it on a grand scale of things, we were talking about a 90 to 120 day period, which isn't really a fair trading period to assess something in, but it went through massive swings, and that scares people, right? Yeah. It scares the bejesus out of it. It scared me. Yeah. My money was in the product. Scared the crap out of me, and you don't want to do that with larger sums of money. What I found really interesting about this software, And it's funny how the conversation about the software, the new one, even started. Q8 is the name of the software. How the conversation even started was it wasn't actually built to be a alternative investment trading software. It was built to beat a buy and hold strategy. So what he saw and what Orem saw was people were moving some of their assets towards gold because there's a looming recession, you know, flight to value, things that are market, non-market correlated. So if the market plummets, at least they've got something that'll hold value, gold being the standard that people revert to. Yeah. And he said, that's great, except for one problem. If the market goes up in gold, yes, you get the ride up, but there's no way to short the hard asset of gold by holding gold. Right?
If you actually buy and hold the actual,
if you're actually buying and holding, right? How many companies are there out there doing that right now? Right?
True.
You have a lot of these IRA retirement fund companies that are out there buying hard asset gold, helping people buy hard asset gold. And listen, man, these companies from 15 years ago to now, they became a massive part of the financial services industry. You know, and there's a lot of big players in that space right now. And there's a lot of private equity funds buying those companies because there's so much value in them right now. People are flying towards gold. So the Orem team came to me and said, listen, people are flying towards gold, but here's the problem with it is gold's going to go up and it's going to go down. When it goes up, that's great for those people in the buy and hold strategy, right? But how are they capitalizing the market movement? They're not. They're only taking the ride up. The ride down, they have to ride it down too. So is there a way to capture those downward movements, right? When gold restabilizes, when the economy restabilizes, when the flight to gold turns into, okay, I'm going to cash in on my gold, right? How do you capitalize on those movements? That's actually what Q8 was originally designed to do. It was designed to be an extremely conservative, low drawdown, buy and hold beater.
Okay.
So the idea is if you were going to put 100 grand in gold, no, don't do that. Put 50 grand in gold and put 50 grand into this buy and hold beater so that you have something that'll move with the markets while your gold assets are stable. Does that make sense?
So kind of. So you mean like when it'll be able to take the downtimes too? Like it'll take the trades as the market's
it's a hedge to your hedge. It's a hedge to your hedge.
Okay.
Right. So at the end of the day, that sounds silly when we say it out loud, but the truth is that if you look at some of the fluctuations in gold prices, it makes sense. Look at the fluctuation in oil in the last 5 years.
Yeah.
I mean, it's incredible. It's incredible.
Take those long-term gains, but be able to take the shorts as well.
That was the design of the software originally. That's all it was designed to do. It's not a true HFT where it's in there taking these micro wins and stuff like that. It's designed the opposite. It's designed to take it over longer time frames. It is a day trader, so it does close the trades out during the day. But it's an hour-long trader. It's a 2-hour trader. It's sitting inside of some of these longer time frames, and that design is to limit the risk. Which, as you well know, if you see the movement on a daily chart, it's going to be all over the place. If you can hold out through some of those periods, you can capitalize on them as the swing happens. But if you see those larger trends in longer time frames, man, what do you do when a larger trend gold is pointed downwards and you just move 50% of your IRA into gold? There's nothing you can do. You're going to sit there and you know, and again, not financial advice. I'm not a financial advisor. I'm not telling people to run out and buy gold or not buy gold or that kind of a thing. Our mindset was to develop an alternative. Our mindset was to give somebody an option. And as Orem came to me and brought this technology to me, I was blown away by it. And then I realized, wow, this isn't just a hedge for a hedge. Right? This isn't just how to beat a buy and hold strategy, outperform a buy and hold. This software works, generally speaking, as a great trading tool, right? You're not going to see the 30, 40, 50% months with it. You're not going to see that. And if you're looking for that, honestly, I hope your heart's strong, right? I hope your wallet is stronger. But that there's you can find softwares out there that'll do that for you. This was designed to be a much more conservative model. Where you absolutely minimize drawdowns. Forget about monthly drawdowns. This was designed to minimize daily and weekly drawdowns. With the goal being to minimize even a negative week, let alone a negative month, right? Which is appealing, right? But when you do that, you lose the upside. You lose that massive double-digit day swing. But is it worth it, right? We all experienced it with the one product. I mean, it's not necessarily worth it. So this is our mindset here. Our mindset is very much something a little bit more conservative, minimize the drawdowns. On the conservative mode of the new Q8 software, mathematically, it has to lose 39 consecutive negative trades to lose 10% of the account balance.
Yeah, that's a high number.
That's a really high number. Really high number. So
for sure.
And I've been asked a few times, well, how does that work? How does look? Leverage can be your friend and leverage can be your enemy.
Yeah.
Right. If you are in a conservative account, using 10-to-1 leverage is probably not the smartest thing to do. Right. I'm not a financial advisor. I don't go out and tell people, no, you should use, you should put 10,000 in, trade it as 100,000, use your leverage, Not doing that. I'm the exact, first of all, me personally, I don't do that anyway. Right. I don't do that anyway. But I believe that if, for example, an account is designed to be traded around $100,000 account, put 100 grand in. If you can't afford the 100 grand, it's the wrong software for you. If an account is designed to be a $10,000 account and you want to put 20 grand in, that's great, right? You can trade 2 times the amount, you're fine. But don't leverage just to get your foot in the door with something. Does that make sense?
Yeah.
So, and that's really the mindset that we've approached this new software with. And we've teamed up with a couple of brokerages to deliver it who have that same mindset, who believe in it the way we do. We don't want to get with some of these brokerages that are just looking to get you to put assets in. That's not our mindset. As you well know, we don't play games with other people's money. We don't like that concept. It's scary. It's scary to trade your own account. It's even scarier to have other people's money at risk. We don't trade the assets. We don't do any managed accounts. We're a software company. You want to open your account with the brokerage and put it on. The brokerage is the one that you do the business with. You don't do business with us on that side.
Right. But you use this tool.
You can use this tool. It is a software. The software plugs in. It does have a managed account model. And probably my single favorite part about it. Okay. And I spoke at length with Orem and their development team about this, about how we should model this out, because the truth of the matter, right, is we wanted to give away the technology for 30 days. We wanted to give it away and let people use the technology for 30 days, realize what it could do, and then want to buy in. And we played with that idea for a while, and we realized it has a big flaw with it, which is that you're going to get a lot of people that are just testing it, that can never really afford the technology, or don't necessarily want to pay for the technology. So you're going to end up with a lot of tire kickers and people like that are going to take away from the efficacy of the core trades, right? Because you don't want to move the market with too many people involved in it. You want to make sure you have a certain number of licenses that allows the trading to keep working correctly and doesn't cause slippage, et cetera, et cetera. So what we said is we'll offer the software with a 30 days, no questions asked money back guarantee. So there's no hoops to jump through. You don't have to have invested a certain amount or done this. You want your money back in 30 days, you get your money back in 30 days. You just ask for it. Our belief is that if you put this on your account, and you genuinely use the software for 30 days, that there will be no question in your mind that you'll want to keep the software.
But you're not. I want to make this clear too on that. You're not actually going in and making the trades using the software. It's not like our other bots that we've talked about on this channel a lot.
No.
This is something that is automatically taking all of the trades for you. You have it
So
up and running. It is taking all of the trades.
You turn the software on in your account and it trades. You want to turn the software off, you have the ability to turn the software off. But when it's on, it trades. When it's off, it doesn't trade. You have the absolute ability to turn it at any point on and off. But it does take the trade for you when it's on, based on the parameters that you've accepted. So it does take the trade. I don't like the term auto trader. Auto trader implies that it's just on all the time. You have no control. You have no. You have control of the software. Okay, you have complete control of the software from that perspective. So it isn't a true like auto trader, but when you turn it on, it populates and executes. Okay, it does populate and execute for you. You don't have to do the math. You don't have to figure out market conditions. I'll give you an example. If you're not a news trader, right? If you find out that there's news coming up and you don't necessarily want to trade during this period, turn it off. Doesn't take any trades. Okay. If you're going to be on vacation in Alaska and you're going to be away from the internet for 2 weeks and you don't want it to trade in your account, turn it off. Turn it off because you can't watch it. You can't do whatever. You don't like it trading in the overnight. Turn it off. You only like trading in the overnight. Turn it on, turn it off. You have that level of control. So it is not an auto trader from the perspective of once it's on, it's on. It's not a managed account. So there's nobody else watching it but you. Okay, you have that choice to turn it on. So that's why it's a software program and it's not a managed account or a CPO or CTA or anything like that. It's not a pooled offering. You're not mixed in with a bunch of people. Like, you have the level of control with it. So, and that's
I gotta say, it is. But I gotta say, I sure like the convenience of being able to leave it on and trust it. I just look at it, and it's just as fun as taking like actual trades because it's up and running and it can trade when you can't and stuff like that.
It gets exciting. Exciting.
Yeah, you jump, open up the phone, and you're in a trade at that time, and it's taking it, or
and you watch it,
or you just get out of it. Yeah, you
can close the trade. You can close the trade if you want to. You reserve the right to close the trade. We ran a bunch of hypothetical scenarios, and one of the things we realized when we were running the scenarios is the level of control that the trader has if they want it, right? So you have the ability, like, you could be in a trade and say, listen, I need to pull $1,000 out of this account. I got to close the trade to do it. You close the trade right there on your own. So it's not forcing the trade at any point. If you don't like the fact that it's still in a trade, even though it's at profit, and you want to take profit at that point, you can take profit, right? So that's the other, that to me, that's very empowering. Like you said, it's really cool to watch it get into the trade. And watch it, you wake up and you saw 2 trades happen like that. It's very cool, but it's also very empowering to have the ability to get yourself out of the trades, I'll tell you one of my favorite metaphors with it, and I didn't come up with this. I'd love to take credit for it. Is I was talking to one of the students over at Target about a similar software, and he used an analogy, a metaphor that I really liked. He said, I feel like I'm my own fund manager. He's like, I've got these traders underneath me, which is the software, taking the trade. And if I don't like it, I can close the trade. And if I do, I can let them ride with it. And he's like, I want to get enough of these so I feel like I have my own hedge fund. And I went, that's powerful. Like that's a great mindset, and he's a young man who's gotten very involved in Umar. I'm talking about Umar.
Oh, okay.
He's gotten super involved in trading. He's just a sponge for knowledge. He's trying to figure out everything he can. He wants to do options. He wants to do futures. And the frank truth of it is he's a freaking damn good trader. But his mindset I really like, which is this idea of using the leverage of, okay, this stuff I can do manually, and I'll put, say, 30% of what I'm doing there. This is an automated short-term strategy, so I'll put 30% of my assets there. This 40% is going to be these longer-term strategies like the SPY or the equity portfolio, where it's like a weekly trade, right? They're changing their positions on a weekly basis. Now, by the way, it's automated also, which is we got automated trades on the SPY and on the equity portfolio. So his mindset is now I can leverage my time. So now I have these things executing for me, and I'm watching the trades to get out of them, but I don't have to watch that market on an every second basis. And then I can maximize my personal trades using Pat's market profile method with this section of my portfolio. So if you think about it, this guy just created his own hedge fund, right? He's got each one of these steps plugged in, right? Trading options, okay, uncorrelated. Trading the SPY, which is also options but uncorrelated. So he's got the synthetic stock and he's got the SPY. Then he's got his other automated trading platform, and then he's got his own personal trades that he's doing. This guy's pumped about Q8 because he's like, yeah, I'm gonna plug in another piece to this puzzle, you know. And he's got enough diversity amongst them that he's doing. And bro, I'm listening to this and I'm going, how do you explain to people what he just did? How do you explain that you're become your own hedge fund manager, right?
Yeah, you just
and then but I mean, you can't like run ads and say, hey, become a hedge fund manager. Like, you can't do that. Like, what an awesome method, what an awesome mindset that he had to be able to put it and to do that. And smart. Then and he's diverse, right? He's got it in different packages. He's leveraging his time, right? So if he doesn't get to the day trading side of it today, that's okay, because the other sides of his portfolio are still trading.
Yeah, just letting his money work for him. I want to ask you something. I see on the website. It sounds amazing. I want to hear your thoughts on it and break it down. The average, so it's like you said, around 55%. So 54.72% of the time, the average success rate, the win rate with the Q8 software via the back testing for the last 5 years, trading gold with the MetaTrader Forex platform, assuming there's $10 commissions. And staying turned on
$10
the
round
entire
trip.
time.
Right.
Yep, $10 round trip. So staying turned on the entire time. It's constantly running. No management at all. The software won 54.72% of the time. Now, it must be understood that there will also be sequences of bad days, weeks, or even months in the future. Of course. As experienced in the past, the software was able to make the adjustments and come out on top. As always, please remember that past results are not indicative.
There it is. There's the
results.
phrase.
There it is.
Has to be there. Has to be there.
But the part that I love,
my compliance lawyer, by the way, is going like this right now. He's going, "Well done, Michael. Well done."
Thank you. The cool part of that, the software was able to make the adjustments and come out on top. Yes. Explain that. Is that the AI?
Yeah, that's exactly what it is. So what the AI is going in and doing is it's recognizing the shifts in the conditions, right? So we see this when you get into the summer doldrums. So take a and you can see it in there's some graphs on the website. It's under novatradinglab.com /Q8-software.
And I'll put everything in the link below for everybody to check out.
So what happens is you get into these periods where there are definitely going to be drawdowns, right? There's drawdowns for most traders, because whether it's choppy conditions, whatever it is, it becomes very hard to trade during those periods. So what the software recognizes is it has like a holy crap moment, right? Like, wait a second, we've taken 3 losses in a row. This isn't right. Something's going on here. And the software is saying, yeah, the volume is slowing down, right? The bands that the trading is taking place in is becoming tighter and tighter and tighter. Okay. I'll give you a perfect example. Big news coming, right? Election news. Let's use election news because this is a big one that influences trading. The 2 or 3 days prior to election news coming out, what happens to the markets? Volume goes down. They get really, really tight because nobody knows what's going to happen when that news comes out, right? They don't know which direction, and it can go in either direction based on the news, right? Yeah. But the big trend, nobody really knows where it's going to go. And the truth is nobody knows the strength of the sentiment. So remember earlier we were saying, like, you don't necessarily know, you might know the direction, right? Republicans are coming out on top. Great. Market's going to go up. But how hard is it going to go up? How hard is that belief in that sentiment? Is the volume shift that much in that direction, right? So it's a shift, but is there enough weight behind the shift, enough velocity to it that it actually allows trending trades to work, right? The software takes all that into account and it adjusts the trades afterwards based on the data that it just got. So it had that holy shit moment. Wait a second, things are slowing down. Right? Things are slowing down. It doesn't know news is coming out. It can't go, hey, listen, right. CNN, and it doesn't see that part. But what it does see is it sees a shift. It sees a shift in how the trading is taking place. Bands getting smaller, right? It sees a shift in volume. Hey, people are slowing down what they're doing right now. Something's going on here. We got to slow down on this one, right? So it then adjusts how it trades based on that. And the adjustment is, okay, it's not necessarily going to step out of the markets, but it's going to say during periods of this type of conditions, which of the indicators work best? Okay, the moving average, not a great one during that period, right? High volume areas, yeah, because those high volume areas, even though they're shrinking, they're still going to be there, right? So it might take away the weight that it gives the moving average, but it'll give the high volume areas more weight. Does that make sense? Yeah. So the software adjusts itself to trade during the indicators that are optimized during those periods. And then if you see the shift again in the volume, it says, okay, wait a second, the volume shifted again. The swing of the trade shifted even more. The bands opened up again, right? So all these factors, as it trades, as it changes, says, okay, it changed again. So what did it change to? Okay, well, now we're going to change back to these indicators for these conditions. And to be clear, this isn't something that takes hours, days, weeks, months, whatever. It takes seconds. The software does it in seconds. It makes these adjustments in as quickly as you and I can have the conversation, right? Yeah. As soon as the conditions shift in a measurable way, it identifies the shifts. And what that's able to do over time is shift the weight of the indicators that it's using, resulting in a more steady and conservative yield. That's how it's able to make that shift. I don't know if that's a long-winded explanation.
It does. So it is actually beneficial to leave it on, right?
Yeah, I think so. I leave mine on. Again, you have the ability to turn it off, but I leave mine on, and I'm going to tell you my rationale. Yeah, I like the fact that it's constantly getting that data too. I like the fact that it's constantly readjusting itself to the data. And it's also a question of
the way that it limits the losses. It's not. That's
exactly
fine. It's fine when you take an L. It's not. You're not.
You're not taking these big L's. Yeah.
There's small little losses that it's like, I don't know. You gotta take an L every now and again. But the way that it does it limits those losses to such a small amount that it really doesn't hurt.
Right. And then you see how, and if you watch, you'll see it. It'll do that double down after like a 2 losses in a row or 3 losses in a row. It'll do that double down and you'll see this big win right after. And it's weird because you're looking at it going, that doesn't make any sense. It should have walked away, right?
Yeah.
I keep telling myself, I always think of Pat's method, right?
Uh-huh.
And I keep telling myself, why didn't it walk away? And then it takes this big trade. I'm like, thank goodness it didn't walk away. You
Yeah.
know what I mean? Like,
Seriously. Uh-huh.
but I think you said it right earlier, and it's hard to explain the feeling until you've actually watched it trade. It's really exciting. Like, it's
It is.
genuinely exciting to watch a trade because it gets into some of these trades and you're like, wow, the timing on that was awesome. Like, it got in at like exactly the right time, and it is fun to watch, but there's also, I don't know if you've had any of these moments. I had a couple of those. What the hell is it doing? Have you had any of
Yeah.
those yet?
Yeah, I mean, to be honest, half the time I'm like, I don't know why it took
I don't
it,
see the
or
pattern.
I don't see where it was looking to get in on that, but I'm glad it did.
Yeah. I've had a couple of wins where I'm like, it got into the trade and it sat in the trade for like 15, 20 minutes with no movement.
Yeah.
And I'm thinking, what is it seeing that I'm not seeing? There's something there. There's a buildup or something. And then all of a sudden you get this big move and you're like, how did it know 15,
Stand.
20, 30 minutes beforehand that that's the move that it was going to take? Like, there's something somewhere in the indicators. There was this buildup happening that you and me and the naked eye couldn't see, but
Yep.
damn, the software saw it happening. The software
Yeah.
saw it happening. So, and the other thing I really like is how it builds up contracts. So it adjusts the relative. I call it the commitment, right? It adjusts the relative commitment. Imagine you could do that in relationships, right? That's our joke with the developers. So it says, okay, like this is a big move, but it's a big move on 3 of the indicators or 4 of the indicators versus this is a big move and 7 of the 9 indicators are weighted right now and they're all saying it's moving in this direction. It goes, whoo, throw a bunch of weight behind that, right? Instead of throwing 2 contracts, throw 4 contracts behind that because it's a big move, right? So it's interesting how as it adjusts the weight, it based on the indicators. To me, it's brilliant and it's almost obvious. Like, why didn't we do that before? Why didn't anyone do that before? Like, that makes total sense,
Right.
So, and I believe at some point, maybe I'm wishing here, but I believe at some point people are going to look back at an indicator that doubles down when it gets 2 or 3 losses in because of the faith in the system and say, mathematically, that was actually the right move. We just didn't see it at that time. I think I'm a real student of the financial markets. Like, I literally, my free time is like reading books about financial markets. So I'm a nerd out on you for a minute. So Jim Simons, who was one of the first true algorithmic traders, technical analysis using computer analysis to do it. Renaissance Technologies was one of his funds. He had a number of different funds, but I mean, the guy had these just incredible years with incredible returns on large scales. And we look back at what he was doing now and think, yeah, well, duh, like, of course that, because we've grown up knowing that his systems worked, right?
Yeah.
But at the time, people thought he was a nut. People thought he was crazy. People said this guy's going to do this stuff with math that it's math. It doesn't make sense. What about the news? What about the sentiment? What about this? What about that? The truth of the matter is we look back on it now and say, my God, the guy was a genius.
Yeah.
Right? The guy's an absolute genius.
It's like that saying, you're insane until you're successful and then you're a genius.
Exactly. So you look back on some of the stuff I think people are going to look back on some of the modeling that we're doing right now and seeing with the Q8 software and say, yeah, this is something way bigger than what we initially thought it was. So I believe that. I think that's what we're going to see. And I think at the end of the day, it's going to be a system, obviously with it teaching itself over time as well. I think there's a huge value in that. And one of my favorite things about working with these guys at Orem, and I've done some work with them in the past, is that they're so out of the box, so non-traditional, so You know what I'm saying? Like they're
Yeah.
constantly coming up. Like he messaged me. First of all, they work on a different timetable than we work. So I got a text from him at one in the morning last night, and he says, "Wait until you see what I have next." And I'm like, dude, we haven't even rolled out Q8 yet, and he's got like the next technology down the line. But they're so out of the box. They're so like creative and so unique in their approaches to the market. It's really fun to see what they're doing, you know. And so we're enjoying it, and this is going to be a good ride. I'm excited about the Q8 release.
Dude, I'm super pumped about it. You know, since I've been on it, I text you all the time. Like this is fucking sweet, bro.
You can't help yourself, right? Like, it's cool. It's cool, and it's fun, especially when you come from a background like you and I do, where we're kind of used to the older style, and we get to see it like this, and we get to see it like functionally
completely
working right.
Different.
And it's like,
now
I'm sitting on my phone. The one of the programmers is Brazilian, and he was saying something, and I didn't understand what he was saying, and I put it in Google Translate, and he was calling it toilet trading. Meaning you can sit on the toilet and trade.
I was just thinking about that, dude. That's so funny you say that. I was literally just thinking about it. Every time I go to the bathroom, I like check it real quick. Like, did it make money?
Exactly, and I'm laughing my ass off because I didn't get the translation, bro. Because I'm going, it doesn't. Is he trying to say the trading is in the toilet? I didn't understand. Oh, every time you use the bathroom, you're checking your trades. I get it. Okay, but it's funny. It's funny to be able to trade like that, bro. It's very
different
empowering.
Game, right?
Yeah, super empowering. Super empowering. So
it is.
Bro.
Here's what before we wrap up, I just want to because I'm going to put the link for everybody in it or in the podcast and the details below and everything like that. And again, I'll put please remember that past results are not indicated.
Historical results are not indicative of future results.
Future results. Of course, that'll be in there for everybody. But look, if you guys want to take advantage of it, of course, use the link to do it. But what is something that you would tell them? Like all right, let's say that somebody has an IRA and they want to switch it over and put it into this. Can you explain a little bit about that, or how they would do that? Or is that possible? Is it possible?
Honestly, I can't give them that advice. That they are that's for their financial advisor or for them to talk to the brokerage about. I do know that's what I mean. You can use yes you can use and you can open an IRA and do it with it. You're allowed to do all of that. But to be frank with you, I am not a financial advisor. I don't give financial advice. The answer is you can do it. I'm not quite sure how they would do it individually. It's no different than we were talking about a couple of weeks ago with the hedging. People have money in their 401k. How do you use an option strategy in your 401k? Well, you can do it, but you got to talk to your financial advisor about how to do that.
Or talk to the brokerage, right?
In this case, just talk to the brokerage. Yeah.
Right. I guess that was more of my question. Is I just want to see, like, if that's something that you want to do, you can do it with this, right?
Yes, 100%. Yes. Okay. Well, not with us. We'll send you to a brokerage that will have a system for you, but we personally don't. We as I said earlier, we found specific brokerages to work with that we're very big on. Well, you know this. We're very big on our mindset, and we're very big on brokerages that work with clients the same way that we do. That have the efficacy, that have the they have to have moderate fees. They can't rape the client on fees, and that also have customer service that delivers answers like that, right? Because if you go to like Robinhood or you go to I'm not going to call a bunch of people. I have issues with Robinhood. That's why I don't mind calling them out. But if you go to certain places, like you just don't get the customer service and support that I believe that somebody wants and needs in order to be successful. Don't get me wrong. Yeah, there's places, and Robinhood is an example of that. Robinhood is a great entry-level program for people. It's a great place to open the door. But when you're looking to get like advice and direction, that's not where I would go for it. There's other
Yeah.
places to do things like that. So what we've done is we've kind of, we've been in the market for a long time. We've gone back to a lot of the introducing brokers that we've worked with in the past, and we've found groups that we're super comfortable working with. That we believe that their mindset is on the same level as us. So like ATC, Dave over at ATC, he's amazing. Their customer service is just phenomenal. They'll answer questions. If they don't have the answers, they'll help you get them so that they can help the next customer.
You can chat with them.
Literally chat with them.
Like at any point in time. They always answer. It's amazing.
They always answer. It's crazy.
Yeah.
Greg over at GFF, CTG. I mean, Nell at CTG is just awesome, and she's super friendly. She gets back to you. Greg at GFF. These are our people. You know what I mean?
Yeah.
And I'm very picky. I'm extremely picky about who I want to do business with, because the truth of the matter is, how hard it is to work with customers. Even our business started off with students. Right.
Yeah.
I'm going to be really careful about who I introduce to my students, because you heard what I just said. I take ownership of my students. I want to help them grow. I want to take them to another level. I want them to have a great experience doing what we're doing. Yep. You remember the conversation 2-3 years ago with Target, right?
Yep.
Target Trading. We wanted our students to have a great experience. It wasn't just about becoming a good trader. It was about their experience in becoming a good trader. It was about customer service. It was about support. It was about having people watch your back, guide you in the right directions. So all those relationships that we've built over the years, we take that into account when we decide where we're going to send our customers. So that's a major, major, major factor for us.
Heck yeah. And there's no, it doesn't matter where in the world you're at, right?
Actually, that's the best part of the Q8 software. We have both offshore and onshore for software use. Now, we are a US based company. And again, we are a software company. So it doesn't really matter where we sell it. Now, obviously there's restricted countries that you can't do business with because of US regulations, right?
You're right.
But that's a whole different animal. But for example, with Q8, if you're in India, if you're in Australia, if you're in the UK, if you're in South Africa, you can use the software. It's functional. It's available for you. If you're in Nebraska, it's available for you. So we've got availability for everything for people that depending on where they are, and also depending on what they want to trade. So it's really important if you do go to the website and you check it out, there's a questionnaire that you get access to that asks I think it's 10 or 12 questions about where you live, what your experience is, et cetera, what type of assets you'll be trading. Between you and me, I'm going to trade. Now, this is not advice. This is just my personal opinion. I'm going to trade my alternative investment money, right, far differently than I'm going to trade my IRA money. My IRA money, I'm going to be a lot more conservative with. My alternative investment money, I'll take some risk with, right? If I have a drawdown, I have a drawdown. So the mindset with this is getting to know what software suits the individual purchaser the best, so that they're not getting a software that maybe it's a little too aggressive for them, or it's configured a little too aggressive, or it's configured a little too conservative, right? There's people that can have it configured too conservative. You're a super experienced CFD trader, trading out of Australia or something. Your mindset is totally different. You're going to look at some of the yields and the configurations on our stuff, and you're going to say, listen, man, that's too soft for me. It's not taking a chance.
And you can't change that after you start.
Yes, there's different models. There's different models for doing it. Yeah, you have to that's why we want to make sure you're in the right model. That's the important part. So yep.
Excellent. Well, Zanetti, thanks for joining us, man. Thanks for coming on and explaining this stuff. Yeah, absolutely. I'm excited to get this out into everybody's hands, and so they can see it go to work as much as me and you have already seen it do.
It's exciting, man. It's exciting. Awesome talk, brother. Be good.
Absolutely. Thanks a lot.
See you, bud.